Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Range-bound market to start the new year. So the stock market has begun 2023 in much of the same way it ended 2022, in a fairly narrow trading range. Now, given all the doom and gloom and calls for market crashes and volatility, it may actually surprise many people to learn that the benchmark S&P 500 stock index is essentially flat during the past week, the past 2 weeks, the past 3 months, and the past 6 months. Now, yes, of course, there have been some gyrations along the way, but if you look at a chart, the trading range continues to narrow. Now, could this be the calm before the storm? It's certainly possible. The first big test will be the upcoming reporting season for earnings that begins next week. Fourth quarter earnings were likely pretty decent, but everyone's attention will be on the forward-looking outlook for the rest of 2023. Now, the good news is that expectations have already come down quite a bit, which should make them easier to beat. But unfortunately, there are some early signs the economy may be weakening to the point that those expectations aren't nearly low enough. But until we see future earnings estimates begin to move higher, or at least stop heading lower, we're likely holding off on making any tactical changes to increase risk in our portfolios. For this week's featured insight, what's your time horizon? Well, if your goal is to maximize your investment return while minimizing your risk, you need to match your portfolio and its underlying investments to your time horizon. If you're investing for the next 12 months, it makes little sense to speculate in the stock market, given that you have roughly a 1 in 3 chance of losing money over that time frame. Now, if you're investing over the next 12 years, a healthy allocation to equities is likely the only way that you'll earn a reasonable rate of return over inflation. And your risk of losing money over that time period is exceedingly low. Now, the key to successful execution of any investment strategy is to measure your results on longer-term investments over sufficiently long periods of time. If you have a 15-year investment horizon, don't panic and change your approach if you see your account value decline over 1 month, 1 quarter, or even 1 year. Staying the course is the hardest part of long-term investing, but no one ever said it was easy. Looking ahead, earnings season approaches. Well, as I alluded to earlier, the corporate earnings reporting season begins next week with the large banks kicking things off. Now, aggregate earnings for all S&P 500 companies are expected to be slightly higher than the fourth quarter of 2021, but only a fraction of 1% or so. On November 1st, those same earnings were expected to be 6% higher, and back on October 1st, the expectations were for more than 9% growth. So clearly expectations have come down substantially. The companies will probably be able to beat the lower earnings bar, but future guidance will be key. First quarter earnings are now expected to decline more than 6% versus a 2.5% increase that was expected back on October 4th. So the path forward for stocks will depend on whether or not those future expectations will continue to weaken or whether the worst of the earnings cuts are behind us. I'd be careful betting on the latter until we see clearer evidence of that in the actual numbers. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.